Hello everyone, my name is Chris in Canada. I thought today I would speak a little bit about Artis REIT. Artis REIT, as of today, December 23rd, 2023, is the day after they just made a major asset sale for 8 Canadian retail properties for a total of $222 million at a price of $373 per square foot, which is about $40 more than their implied value that is carried at overall on the retail side based off what they've disclosed in their presentation. Again, the price has been in line with the IFRS NAV values, as other asset sales that Artis has conducted have been for the most part. I think they may have had a couple that haven't been, but just minor ones that, they're still close, but they're not there. But most of them have been in line or even above. And most importantly, I think they said that there is an increased amount of interest in Artis's assets due to the drop in bond yields recently. So I find this a very notable point for Artis because they're amidst a strategic review and such a high price. I think every single sell-side analyst report today, I've seen TD Scotia, all noted that Artis got an excellent price for their assets. And these were not really top tier assets. They were just like mid-market assets, old kind of school ones with the cinema and Calgary, Winnipeg area. Nothing glamorous, and the price they got was stunning. It's very, very interesting to note that Artis is still trading at only 42% of its book NAV of about 15. So that's after today's rally. That's almost a 60% discount, which is incredible because Artis has now sold significant assets time after time, and the market is still not giving them any respect. I see that as a continued opportunity. If we look at Artis, let's take a look, and you're going to look at even a 10-year chart here. You can see what happened. Just last year, you're $14 per unit. Nothing has changed with Artis. I would say that we're at the end of the interest rate cycle. It's better to be in now than it was then, that's for sure. With all that variable debt, they should be on the uptrend. Last year, I should say perhaps at the beginning of the year, during the peak bear market for REITs, especially office REITs, they were kicked out of the TSX Composite Index at a time that REITs were selling off, which caused substantial selling pressure. You can see that it fell almost overnight from $9.60 to $6. And you can see those big volume spikes. That was index selling related primarily. So really that would be alarming, I think, to some people. When you see that drop, you think something's wrong, something went wrong, something changed. But really, no, your REIT became out of favor and you were deleted from indexes. And in my view, based off my experience observing, I think that's often an opportunity. Is when a name is discarded from an index, that's often a good buying opportunity because of that forced selling. So I got in mostly at the end of the selling. I did have a small position last year, around $9, but I got most of mine around just under $8. So I am down on Artis a little bit, but when you factor in the distributions I've received, I'm not that much down, and I'm very excited for Artis, where it's headed, and I'm prepared to be a long-term holder, even well into I would say above $10. I don't have any intention to sell. But anyhow, you are consolidating now. You're coming out of that big drop. In the meantime, this year we had a hedge fund called EdgePoint, very respected group. They took about 10% of all units, and we still have another couple buyers. I don't know exactly who they are, but it looks like Artis has become an illiquid REIT with the significant insider ownership. The NCIB, EdgePoint taking another position. There was another ETF that I think I counted about 3% added in the second half. They re-added Artis to their ETF. That was a huge, I believe they were the BMO buyer. But yeah, so I'm very encouraged to see that the smart money coming back into Artis, and I don't see any reason that Artis should be below where it was to start the year. And that is a great opportunity to take advantage of that index selling. So as we know, Artis has been selling assets. In addition, they've been doing an NCIB across all three of their instruments that they have, which would include their common shares and their 2 sets of preferred shares. So if we look at Artis, right now they have about 107.9 million shares or units outstanding, which is down significantly just from the beginning of the year where they had 115. So, that's about 8 million less almost. So you go back even when COVID started, you were at 137 million. Now you're at 107 million. Artis has been the most successful REIT in Canada at buying back units. So, I find that quite encouraging. They were able to actually increase the net asset value and at the same time discard assets for disposition. So they've been selling assets at full price to buy back units at an implied discount of up to 60%. Quite incredible if you ask me. So Artis, I think, is a very confusing REIT to people. If we talk about Artis just, briefly and what Artis is. So Artis is a diversified REIT. They have multiple asset classes. If we look at the asset classes they have, they're very spread out between office, industrial, retail, and Canada, United States, and now they've even delved into residential with the build out of 300 Main in Winnipeg, that new condo that's over 40 floors. So it's a very defensive REIT in my view, and they have been selling their assets and as opportunity comes, but they've been retaining their best assets. So they've been selling offices, lower end retail, and they're keeping their grade A US industrial. That's what it's looking like to me. If we look here, their industrial is significant in the US. These are all industrial assets down here mainly, and they do have some offices as well in the US, of course, but their offices are Class A Class A offices. They're very beautiful buildings. They're not the ones that are troubled in the US, and the markets they operate in are stronger than, the markets you read about in Twitter about these empty office buildings, this and that, in places like Washington, D.C., and Baltimore, and San Francisco, and, it's a more stable market where they operate. So they do have good fundamentals, I would say. I mean, there is weakness, of course, in the Madison area in the office market, but it's not as bad as it is in the markets that people are using to scare people away from the asset class. And industrial in the US, and they're grade A industrials, just like Canada, it's extremely a hot market. So, I mean, they're lumping everything in these bears and just tearing apart commercial real estate, and that's created significant opportunity in my view, where you have a REIT like Artis trading at a 42% of its net asset value, selling assets at 100% and buying back units at that huge discount. And then you have a very, 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 very motivated manager with Samir Manji at the helm. These guys own approximately 30% with Jetport, so it's a very aligned REIT. They have a very strong incentive to bring performance for unit holders because they're the largest unit holder. Artis has a very, very been clear that their 3-year plan is very important to them. Samir Manji writes an annual letter about this. I think that his 3-year plan got paddywhacked from COVID and the highest interest rate cycle in history. That huge pace from 0% to 6, 7, 8% interest rates just in the matter of a year. You can't really expect real estate to be hot in a period of uncertainty like that. But now as rates subside and inflation falls, you're starting to feel the momentum in commercial real estate, and there's probably a lot of liquidity sitting on the sidelines waiting to pounce. And I think we've seen evidence of that in the past week or two in Canada with the string of transactions. So I think as Samir Manji's goal is to restore the net asset value and the unit price and align them, you have now a very good vehicle to ride that with Artis, because Samir Manji is going to do whatever he can to bridge the NAV gap. And he's going to do that with asset dispositions. And at the same time, you're going to enjoy a very nice distribution. So I would say Artis is a very confusing REIT to people. And one of the most confusing elements to Artis is that they are not just a REIT, but they've acted as a hedge fund. So Samir Manji, I think he misread the situation. I wasn't a unit holder then. I'm not going to hold it against him. It's an opportunity for me to get in, but he was selling assets of Artis REIT to buy assets of other REITs. So he's basically telling the market that he thinks those REITs are better opportunities than Artis. I find that a very bizarre strategy, but I mean, That's what he did. So he did take, I think, 14% in Dream Office. And then he also at one point took a significant stake in First Capital REIT, which was a bad headline where he tried to take control of the board and they rejected him. And but he still has been a unit holder there, and he has been selling down his position there. So I don't know how many units of First Capital he has left. You can look at the latest quarter and wonder if he sold more, but Dream, he hasn't sold any. And it would be very unwise, in my view, to do any selling at Dream Office because that one is just too discounted right now. Then in 2022, Artis has, taken a big position in Cominar REIT along with Sandpiper and a few other parties like Coke Group and a couple others. Cominar is primarily a Quebec-dominated REIT. They have very nice properties in Montreal. I live in Montreal, so I know their properties well. And they're beautiful, like Gare Centrale, where you have that big train station that's now connected to the REM as the main HQ. You got some nice malls there. You can go to the Cominar website. They have a good description of everything they have on the website for anybody interested. Most confusing for me is with Cominar is how do we value it, because they do have equity and then they have preferred shares with an 18% coupon on them. And Cominar is paying Artis still in more units rather than cash on that 100 million 18% coupon. So, Manji is sitting on the board of that one. So he told me he wants to preserve the liquidity of Cominar REIT too, because they're in the process of selling assets and trying to build liquidity there as well. Similar boat to Artis, it sounds like. But at the end of the day, they see the market in Montreal area as getting better and more favorable for commercial real estate sales. And Samir Manji wants to unlock value at Cominar just like he wants to at Artis. So Cominar playing out well for him will definitely benefit Artis, because if their equity is worth something, that's a significant stake, 300 million between the equity and the preferred. And if the equity is worthless, you still have the preferred that's probably paid off at 18% per annum. So that I don't know how to value, because we don't really know what Cominar is worth because it's a private market everything, so we can only guess, but it's really a compelling situation regardless. When you look at the implied value of Artis and $3.9 billion gross book value, and you're trading at a fraction of that, so 42%, you just have too much margin of error to really lose money with Artis. Like we said today, they sold $222 million of retail assets, and they carry their retail assets at $333 per square foot. They sold at $370 something per square foot, so you can't really go wrong with that, right? I mean, that's a significant sale for Artis, and it just baffles me that the market, they only set them up 4%. Shows that this space is not being watched, and there's significant opportunity, with a almost 60% discount to its net asset value. Even if I use a 50% discount to that office number here, I'm still getting $10 per unit, and that's if I eliminate the Cominar equity portion and just use the preferred share. So, and then just factor in that industrial and retail would be worth their book value. I'm still getting over $10 per unit. So, with the leasing expiry risk, Artis doesn't have very much. They have very good leasing commitments into 2027. It's not something that we should be worried about. Very high quality tenant base. Very, very beautiful Class A industrial, primarily in the US, which is the best asset class in the business. Very modern, very desirable. They've even have some organic growth here with Blaine 35. Very, very nice offices, and most modern, best rent. It attracts the best tenants. So, I mean, it's very nice stuff. This condo was probably planned before Manji got to the helm. It's the tallest building in Manitoba, and Winnipeg is an up-and-coming city. I think there's a lot of potential there, just because of the affordability crisis in Eastern Canada. So it'll be interesting to see what Artis does with this. It's kind of a misfit to their portfolio. It's the only retail asset they have, but it's a stunning building, probably worth over $200 million. So, you have a little bit of retail at the bottom. Beside it, you have some office. Yeah, so I don't know what they're going to do with that. If they're going to sell it or keep it. because they have been selling other Winnipeg assets. They've even sold their Winnipeg headquarters. So it seems to me that Manji is looking to sell more than retain. So I think this is probably going to be something they look to sell when times get better. The really thing that people were scared of Artis, in addition to the bizarre strategy of investing in other REITs with the Dream Office and First Capital saga and the Cominar stuff, was their debt maturity profile. Now, people were absolutely terrified of their debt maturity profile when the interest rates were high and people were calling for bear steepeners and 7% yields. So the good thing for Artis now, I would say, is that they do have variable debt, and most of the bad debt is factored in and it's reflected in their payout ratios and everything. So it's more of a tailwind now than a headwind because the bad news is already priced in. So when we look at these numbers here, they do not reflect the latest asset sales, which have been $334 million. So Artis has probably in the vicinity of $330 million. And we don't know exactly how he's going to direct that debt, but you would think that he's going to pay off the most unfavorable debt, which would be the variable debt. He's already at the end of September, they've transferred a secured debenture and paid it off with their credit facility. So, if we look at their credit facility in their last presentation before the latest one, and we were at 513 million, and now we're at 817 million because that debenture that was in 2023 was retired right here, as you can see, to the credit facility. So Manji is probably going to reduce that floating rate debt, that's my guess, and then use some of that portion for more buyback and whatever else comes out of the Western Canada asset sales. But they've had no trouble refinancing their mortgages, and that was another kind of thing you read about in the headlines, that these office REITs can't refinance and nobody wants to deal with them. But the actual truth is, from my research, is that most banks will deal with existing clients. It's newer clients that will have a harder time, and it's newer access to capital rather than existing mortgages. So that would be the challenge. So getting, say, more money sent to you, like being issued a debenture or getting bonds, these kind of things, capital raises are tougher right now, but refinancing is not much of an issue, especially a credit grade tenant like Artis. So Artis also, most of their assets are actually unencumbered, and they did that tactically because Samir Manji and his team want to make their options being able to be maximized, so they can sell buildings without a mortgage attached for them for better top dollar, easier to find buyers than having one with commitment to it. So they can get better mortgage rates at the end of the day by affixing mortgages and encumbering assets, rather than leaving them unencumbered. But they're leaving them unencumbered now only for the purpose of potential dispositions and to leave the maximum flexibility for the REIT. So all of these things here with the variable rates is coming down as we speak. The bond yields have plunged, and he has $300 and some million in cash. Mortgages, they will come down because he's going to affix mortgages to the asset, and you're going to get a better rate like that. So I really don't see Artis as that risky anymore, and I think that'll be part of the re-rate opportunity. People don't really, look at that, but the space is not covered right now, which creates opportunity. And I think there's other opportunity than Artis, but Artis is one that really stands out to me. Here you see that Manji has listed 1.7 billion of unencumbered assets. So that's a very, very important thing to note, because he's going to, as I said, get better mortgage rates when he's done choosing which assets to dispose of. 8 times long-term debt to EBITDA is a very low multiple. As you can see, this interest coverage ratio is quite low, as it is with other REITs. They've all come down with the rate cycle, but that number I think is going to improve, and you are going to have a better interest rate coverage ratio. In fact, to my knowledge, that coverage ratio is actually below the covenant threshold. So that is a danger zone for Artis, that they could be getting a downgrade of credit, which would make obviously lending more expensive. But that says that it has to be on a prolonged basis, and I hope that the credit agencies have been a little bit flexible in consideration of the rate cycle and where the rate cycle trajectory is going, which is down. And of course, Manji is improving liquidity as we speak. So that interest rate coverage ratio is going to go up as the debt goes down. So yeah, what else can we talk about is that Artis is a motivated manager. He's in the process of selling more assets. He's been selling assets, even office assets. As of Q3, he was selling offices in a 6% cap rate. They're carried at a much higher cap rate, and some people are even calling for 10% cap rates. That's just not logical. He was able to get very good cap rates for his properties. We had a building in Denver that was even for sale that had no tenant in it after the AT&T people left. They sold that one rather swiftly. I know they didn't get the best price on that, but they got rid of it, and it was a non-income producing asset, so that's great for Artis, especially when you factor in they're trading at such an implied discount to their net asset value. So what can we say? I'm very bullish on Artis. It's my main position in the REIT space, one of my biggest ones, top three, and slightly bigger than the other two, which is Plaza and European Residential. I'm very bullish. I think that $10 is a no-brainer here. And whether it goes even higher wouldn't surprise me. It was a $14 REIT a couple of years ago, and not much has changed since then, other than rates, So once these REITs come back into favor, I see Artis as one that has the best near-term potential for a re-rate, just given that liquidity situation where you had those near-term debt obligations, which are certainly being de-risked as we speak. So there's a lot of things to look forward to with Artis in the near term and the medium term, and it's going to be great to see what Samir Manji has up his sleeve, because, he's definitely busy right now, and, he's been gifted to survive till now with the interest rate cycle by the, he just made it out, because nobody predicted that, certainly not him, but we made it through that, the worst of it looks like, and, the rates have tumbled now, so let's see what he has for us. I'm very excited for the future of Artis. If you have any questions for me about Artis, it's one that I follow very closely. I'd be happy to discuss this with you on YouTube or by DM. Just send me a message, and we'll go from there. Thank you for listening, and have a great day.